the TheoTrade. This is Don Kaufman. It's November 16th, 2022. Just a few minutes after the cash close here on this Wednesday afternoon. We're going to be looking at the question, of course, will inflation cooling be enough to take markets higher? We're actually going to look at that in quite some detail here because it's interesting to think about that. We're cooling inflation, which basically means a really poor economy. And is that actually going to rally the markets? We're still in this like wild, like opposite Goldilocks kind of scenario. So before I get there, let's actually discuss a little bit about the S&Ps in general today. SPOOs finished down some 21 handles in the after hours here. You do have none other than NVIDIA that is actually out with earnings. It's all over the place. Traded all the way down to like 153. It's a little higher, dropping over here. Okay, but again, I wouldn't really consider this, just yet in terms of like price action because it's well before the conference call. We all know that this underlying can move dramatically. In fact, it's got about $14 of price action. That is the expected move with this earnings announcement today. So kind of have to anticipate the Nasdaq is going to move quite a bit on there. All right, so S&Ps today, they did sell off a bit, but one of the things I want you to kind of keep in mind for the remainder of the week, which is just this Thursday, Friday, push aside some of the economic data for just a second. I mean, first and foremost, okay, just rip and rally inside of the bonds. And the reason I'm immediately bringing up the bonds, okay, along with S&Ps, this is the first time in a very long time, not only that bonds have rallied, that bonds have actually rallied, okay, with S&Ps backing off. And, with the S&Ps down 20, I want to tell you right now, that's not even construed in my mind as sell-side activity. Like, no part of me believes that this marketplace, like, sold off a lot today. I mean, come on. It's nothing. A 1% move in the Nasdaq, negligible. We've all seen just as of late, economic data comes out, boom, we're up, 200-300 handles inside of the Nasdaq. S&Ps are moving a few hundred handles on news that's effectively breaking. So a 20-point move inside of the S&Ps to me is massively unchanged. The only real mover on the screen today was probably the Russell, which did actually see a little bit of sell side activity. Again, that was actually largely predicated on what happened inside of the energy sector. The Russell is filled with smaller energy companies along with regional banks, which brings us to the financials coming off a little bit. But this is not over just yet. So the bonds are rallying up, which, by the way, is actually helping some of my positions substantially. I've been selling bond puts. So this rally, it's a bit of a sigh of relief for me as we rip back to the upside. But again, to see even the slightest bit of sell side activity with the bonds rallying, like I'm not sure that bodes well for the S&Ps. This is a trade that we're going to have to watch really carefully. Along with it, okay, the dollar, a bit ambiguous in the last just few trading sessions, the last 3 trading sessions, not giving us much of a feel. But the dollar, again, still a hop, skip, and a jump away from rallying right back into what has been just an incredible range. This 110, 113 range, and we're only a few handles away from that. So that's a trade to be watched very, very carefully. At this point, though, as I was saying, so you're getting this feel like, okay, maybe inflation's going to cool. I don't necessarily believe that's the case per se, but even if inflation is going to cool, would that mean some sell side activity in the dollar? Okay, possibly a little bit of a rally inside of bonds, a bit of a rally inside of notes. But at the exact same time, the Fed is still raising rates, so I would expect like the 2-year probably is not going to rally nearly as much, if at all. And by the way, you can always take a look at like the 2-year. Just cruising over here to Tastyworks, bringing up the futures, the small exchange. You got the 2-year, and ironically, it actually moved up a little bit. It's the proof is looking at the actual trade in there. So for the most part, okay, this idea, if you will, of cooling inflation, which is at this point in time, nothing more than an idea. The CPI, the PPI comes out, we ain't home yet. Demand has to cool off dramatically, and that's exactly what the Fed is trying to do, okay? But my point on this, will inflation cooling be enough to take markets higher? Well, wait a second, okay? Cooling demand. First of all, we look at Walmart. Walmart ripped on better earnings, but at the exact same time, if you take a look at Target, okay, this is what happens when you get cooling demand, right? So this entire argument that cooling inflation will actually be bullish for the marketplace. Yeah, it's great. It's bullish for the marketplace right when that CPI number or PPI number comes out. But lo and behold, when Target releases earnings, swing and a miss. Okay, this thing was devastated, just devastated today, down some $23, but way off some of the lows. I mean, traded 148, closed at like 155. So that, people right there, hey, listen, that's cooling inflation. You want some cooling inflation? That's it. Okay, front and center. That's what happens when you actually cool off inflation. Take a look at Costco. Costco is kind of stuck between a rock and a hard place. It loved Walmart's earnings and then sold off a little bit today on the Target earnings. But it's one of the things that I really wanted to point out in this evening's video, because there's this feeling of like relief. You know, finally the inflation is cooling. Yeah, great. That means we're headed right towards a recession. How's that going to bode for some of your stocks out there? You know, not well at all. And it's one of the key points that I really wanted to drive home in this evening's video. Think about it a little bit, okay? Look no further than, again, some of the marquee stocks. I mean, some of the stuff has gotten ahead of it. Like, you know, Nvidia is only down what at this point, okay? Oh, only down 47%. Hey, that's much better than the fact that we're down almost 65%. Nevertheless, okay, take a look here in the after hours. The stock is, again, it's all over the place. But if there's cooling demand, okay, what do you think these individual equities are going to do? And that's, again, it's the biggest takeaway of this evening's video. Now, spin it around, talk about some of the trading out there. Let's actually cruise over initially to the SPX, the mother of all products. The reason we're actually going to jump into the SPX, okay, is for the sole purpose of describing a little bit about the expected move. So pretty much each and every time I do one of these videos, I would actually talk, of course, about expected move. This week's expected move is about 99 bucks. Look, let's just call it 100, plus or minus about $100. So you're looking for this $100 move to higher or $100 move lower. Where are we right now? I mean, come on, we're like massively unchanged on the week. I mean, and not exactly unchanged, but the point that I'm just trying to make over here, if you zoom into this, the week started at 39.93. Okay, where are we presently trading? 39.58. We're just a hop, skip, and a jump from the start point. I mean, that's what this central line is. That's where the week started. It's the upper edge of the expected move, the lower edge of the expected move. Okay, so, you know, what have we done this week? Nothing. We've done nothing. But the point to be made also from here is to look back at every recent week. Why am I looking back? Just to make the point where if you look back at every recent week, we have tagged the upper end or lower edge of the expected move in every recent week. You got to come all the way back here, I believe, to the early August, to see a single week that did not tag. When I say tag, like I'm talking hit or breach the upper end or lower edge of the expected move. Every recent week, okay? Doesn't mean it necessarily closed outside of it, okay? Here's one that, all right, you got me. This one's like 3 points away. But the point being, all right, if that, you know, if you're a betting person here and you're looking at odds, it's pretty good odds right now that we're going to see some wild movement on Thursday or Friday of this week. And that's a bet worth taking right now because, again, looks like we're going to see some wild movement. How wild? If you take a look at the SPX, okay, and just look out to like the Friday expiration, we're still anticipating almost $60 of price action, you know, just between Thursday and Friday. Okay. Enough said on that particular point. All right. One of the last things I really want to bring up here, there's two things, but one of which is we're very, very close. In fact, I'm going to cruise to the 30-day 1 hour. We're still very, very close to the 39.31, and that's a gravity point. That's actually a level that we've actually identified. It's kind of like a seam in risk. So coming down here, okay, we'll have to completely reevaluate the entire marketplace, because what I want you to understand about 39.31, again, 39.31 inside of the S&P futures, that particular line, okay, it's not like a support and resistance. It's like a seam inside of risk. At that point, okay, when I say we have to reevaluate, come back down to 39.31, right? It's a completely different marketplace at that point in time, and we're close to it. So consider it here just in the next, 2 trading sessions coming to 39.31 actually opens the door immediately to getting shoved right back inside of a volatility box of 3,800. The other aspect that kind of resonates with me a little bit, I've noticed that skew has started to pick up once again. For those of you that do not speak geek, skew is the implied volatility of the out-of-the-money puts, okay, and versus the out-of-the-money calls. And skew once again is picking up. So somebody sees risk coming back in, all right? Traders going out now and they're starting to hedge once again. How do I know that? Look at skew. They're buying out of the money puts, and to help finance those out of the money puts, they're selling calls. But skew at like 116 is still pretty nominal, but it just came off in the last few sessions of like the 110, 111 region. So we're actually a pretty dramatic, on a percentage basis, pretty dramatic change inside of skew, very dramatic change inside of the bond market. The S&Ps, they almost leave something to be desired the last 4 trading sessions. That's exactly what I want to leave you with. They do leave something to be desired. Volatility is forthcoming. Thanks everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.